Welcome. Good morning to you from the UK. Good afternoon to you from Tokyo. And thank you for joining us for this webinar to talk about Tokyo and its positioning as a financial center in terms of development and the way forward. We have around 45 minutes for the session today, and there will be an opportunity for taking questions towards the end of the session. Those of you who've been on this platform before will know the drill, that there is a question box on the dashboard to the right of your screen. Those of you who haven't been on this system before, please do go and find it. You can enter a question there, and we will gather those together and answer questions towards the end of the session. Just very briefly, thanks to the FS Club sponsors, without which we couldn't run this series of webinars. So thank you to them for enabling us to do the work we do to bring attention to people across the world. My job this morning is very easy. First, to introduce our panel and speakers. First, Mr. Hiroshi Nakaso, the chairman of FinCity Tokyo, Keiichi Aritomo, the executive director of FinCity Tokyo, and Professor Michael Mainelli, the executive chairman of the ZN Group. We're going to hear a presentation in a moment from Hiroshi Nakaso, and the whole panel will be picking up with you for the question and answer session that takes place towards the end of the occasion. So without further ado, I'd like to hand over to Mr. Nakaso, and really looking forward to hearing his presentation. Thank you.
Okay, thank you very much. It's my pleasure to join you on the panel today. It's a pity I cannot physically be in London, but I hope I can take advantage of the modern technology of virtual meeting. In my initial remarks, I would like to briefly introduce the initiative to upgrade Tokyo as a global financial center and what we intend to achieve. To begin with, let me trace back our history a bit, as it has a lot to do with the initiative. Now, during the 1980s, when I was a junior officer of the Bank of Japan's rep office in London, the so-called Japan money dominated the world. And in the city of London, Japanese banks were often compared to the invincible Spanish Armada. Tokyo, the home of powerful Japanese banks back then, was proud of being a global financial center alongside London and New York. But pride would come before a fall. Since the asset bubble burst in the early 1980s, Japanese banks had withdrawn from the global stage, and Tokyo remained on the sidelines for 2 decades. The Japanese banks survived the global financial crisis relatively unscathed, and they're back in the global arena. They are today the biggest cross-border lender by nationality. Meanwhile, the macroeconomic fundamentals have improved significantly. And it's just amazing to see what was once regarded as a uniquely Japanese problem is now commonly faced by the peers. We used to be a lonely forerunner a decade ago, but no longer so. Thus, we believe Tokyo deserves to play a more important role as a financial center again. Now, let me explain according to the charts. Please proceed to page 2. Next page, please. Yes, it is against this background that an initiative led by Ms. Yuriko Koike, the governor of Tokyo, was launched to enhance Tokyo's financial role. She convened a panel of experts that produced a blueprint in 2017. The outline is shown on the upper panel of this chart. I don't intend to go into the details, but the core intention is as framed at the top, to encourage effective deployment of household financial assets and to contribute to bring Japan's economy back on track to sustain growth. But in other words, what we intend is not a replication of a financial center that boasts only of size, but a sophisticated financial ecosystem that can meet the pressing demand to solve the social economic challenges that we face today. Now, to make this happen, a promotional organization called the FinCity Tokyo was founded, and I was appointed the first chairman. It inaugurated the new mission last April and subsequently embarked on world tours to promote Tokyo. Some tangible achievements have been made. As you see in the bottom table, according to the ZTN survey, Tokyo had been ranked number 6 among the financial centers of the world until last year, lagging behind other Asian centers. But this year, it climbed to number 3 after New York and London. Although, of course, we shouldn't be complacent, this was a good start. Please go to the next page. In the chart on this page, it describes the feature of the FinCity Tokyo. It was established April the 1st last year. I don't know why it had to be on April 4, but we are absolutely serious about the idea. It has a team of 6 consisting of secondees from Tokyo Metropolitan Government and the JPX Group. And although the team is small, the dream and passion we share is infinite. Our office is located right next to the Tokyo Stock Exchange, and we are part of the growing community of new breed of asset management firms, both domestic and international, teams with energy to revitalize Tokyo as a global financial center. FinCity Tokyo's role is to understand the needs and challenges identified by the financial community in Tokyo, and to design measures to address the challenges, and then feed them back to relevant authorities with policy recommendations where necessary. Please go to the next page. FinCity Tokyo is currently sponsored by 41 organizations. We are now in the process of diversifying our membership in several aspects. We welcome international institutions besides major Japanese players. We welcome insurance asset management firms as well as banks. And we welcome fintech and other small and medium-sized firms in addition to established firms. Please go to the next page. Promoting Tokyo as a financial center has been a repeated initiative in the past without a dramatic achievement. You might ask, what makes it different this time around that ensures a success? One difference is that international economic and political landscape is changing in our favor and proving to be a tailwind for Tokyo. In general terms, rising protectionism and unilateralism, an increasingly sharp contrast between the democratic and autocratic regime, only reinforces Tokyo's position to stand out as a financial center built on the firm belief in free trade and investment, and shares a common value of democracy and freedom with the peers. As you see on the chart, on the external side, Hong Kong is under growing pressure. There is increasing concern among Hong Kong-based financial firms about the business environment and, more broadly, the future of Hong Kong. Now, I don't want to take advantage of the situation by proactively pulling financial firms out of Hong Kong to Tokyo, because we know what is going on in Hong Kong right now is moved by the people to preserve democracy and freedom that made Hong Kong what it is today. But we are happy to host those who decided to move to Tokyo. I think we can offer them a stable environment to continue business. On the domestic front, Japan revealed resilience against the corona pandemic that has relevance, I think, for the financial center. For example, the medical system held out quite well. The number of confirmed infected cases rose to over 18,000, and the death toll to around 950. Although the virus has scared off people, the numbers remain, I think, under control. And accordingly, the government has lifted the declaration of state of emergency on the 25th of May to bring life back to normal in steps. So a secure medical system, I think, is a key infrastructure for any financial center. Please go to the next page. Now let us see the economy. It has also shown resilience. As you see on the left panel of this page, the Q1 GDP numbers show Japan's economy, shown in black line, was the least hit among the advanced economies. Now this is in a sharp contrast to the global financial crisis, in which the Japanese economy was hardest hit, which you see on the right-hand panel. The demand component that is of noteworthy strength is the corporate capital expenditure, which grew by positive 2% from the previous quarter, despite the turmoil and high uncertainties. I think Japan corporate firms continued with R&D investment as well as strategic investment to be ahead of the curve, to be ahead of the digital transformation in post-corona world. I think the corona shock adds to the momentum toward digitalization. The next page, please. Another change is the growing presence of emerging market economies. The epicenter of the GFC a decade ago was the advanced economies. This time around, in the corona shock, emerging market economies are more exposed to financial stress because of the buildup of debt denominated in the US dollar. The chart on this page shows capital flow into and out of emerging market economies. The blue color shows equity flows and red the debt flows. Positive numbers means inflows to emerging market economies and negative number outflow. So you can see there is a substantial capital outflow from emerging market economies towards the right-hand side of the graph in the initial phase of the corona shock. That is in a sharp contrast to the GFC in 2008 to 2009, when there was little capital move as far as emerging market economies were concerned. The next slide shows a cumulative equity outflows from selected economies during the initial market stress under the corona shock. You can see many, if not all, of the economies that experienced large-scale outflows were in Asia. I suspect this is much to do with the precautionary demand for the US dollar funding liquidity. In the outbreak of the pandemic, global investors pulled money out of emerging market economies to turn into US dollar cash. So I think the corona shock reminded us yet again that the US dollar remains the key currency. The precautionary demand for US dollar surges when markets are under stress. The dominance of the US dollar as a key currency, which is used in trade and wide range of financial transactions, I think is unlikely to change in the foreseeable future. The global financial markets faced acute shortage of the US dollar funding liquidity. And this was exactly what happened in the GFC for the advanced economies. But this time around, it is taking place across the board, including the emerging market economies. Next page. The dollar shortage was addressed by activating the dollar swap line, which you see on the next page, please.
Nakaso, I have moved the slides on. There's a slide delay.
Banks that are granted such unlimited access, along with ECB, Bank of England, Swiss National Bank, and Bank of Canada. The Fed newly entered into swap agreement with 9 additional central banks, as you see on the right panel. But this is temporary, and the amount available is limited. Now, under the swap agreement, the BOJ borrows the US dollars from the Fed against yen. Then it distributes the US dollar to individual financial institutions in Tokyo through its open market operations. There are 77 eligible counterparties for the BOJ's dollar providing operations. Now, they are not confined to Japanese financial institutions. They include those from other financial centers. Thus, Tokyo proved the only financial center in the Asia-Pacific region where banks have good access to the US dollar funding liquidities through the BOJ. The swap line is meant to be a backstop available only in a crisis situation, but crises do occur. Therefore, having branches or subsidiaries in Tokyo has proven to be a big advantage for foreign banks in a crisis situation, particularly in this part of the world. Next page, please. This chart describes what we did at the height of the corona crisis. Although the escalation of COVID-19 prevented us from visiting overseas, we were able to communicate to overseas audience using digital tools. We liaised with the Tokyo Metropolitan Government and the relevant authorities to make sure certain employees of financial institutions be exempt from restriction on commuting under the state of emergency in order to provide basic financial services for the general public. Meanwhile, we formally joined the World Alliance of International Financial Centers, YFC, in March. I know the City UK is also a member of the group. Our executive director, Keiichi Aritomo, recently joined the board of this group. And subsequently, the members share their best practices in the crisis management. Our financial sector has a relative advantage in this area, as our financial institutions have built up BCP expertise and crisis management skills in addressing a series of crises, including natural disasters. I find YFC exercise extremely useful for financial centers in collectively fighting the corona crisis. Now, let me talk what we intend to achieve. Now, there are three areas of priority that I envisage under the FinCity Tokyo initiative. Please proceed to the next page. First, better asset management. Please proceed to the next page. The next one, please. Yes. Now, there is as much as 1,800 trillion in household financial assets accumulated in Japan. And more than half of this is in bank deposits and remains underutilized. This chart compares growth in household financial assets in the past 2 decades in the US, the UK, and Japan. You can see from the graphs that Japan's low growth stands out. I think the big difference is attributed to the growth in returns shown in solid colors. Please proceed to the next page. Yes, Japan's household assets must be therefore invested in better ways to generate higher returns for the current and future generations. The simulation on this page shows the result shown in this page argues in favor of diversified long-term investments. The left panel shows that the red line representing the return gained through investing in a portfolio of global bond and equities is much higher than that of a Japan-only portfolio expressed in blue line. Likewise, on the far right panel, we see an investment over a time horizon of 20 years generates stable returns converging to 2 to 8% returns, while an investment returns over a 5-year period is more dispersed with occasional losses, as shown in the middle panel. Now, and it is in this area that asset management companies, including those from overseas, have a big role to play. The sleeping household assets will provide excellent business opportunities for the newcomers. We welcome, in this regard, global and emerging asset managers to Tokyo to demonstrate their skills. Please go to the next page. Second, I want Tokyo to be a gateway or a hub to invite foreign investment in thus far little known but potentially promising corporate firms. Please go to the next page. There are a number of small companies scattered around the nation with cutting-edge technologies. And I think Tokyo is well placed to serve as a kind of gateway to help them launch themselves to a higher global stage by inviting global investors. If the capital provided by the global investors is successfully channeled to local firms, it will help revitalize local economies. So also in this context, I think a critical initiative in the post-corona economy will be to reconstruct the supply chain, which was heavily disrupted by the corona shock. So here too, Tokyo, I think, as a financial center, has a vital role to enhance what may be called supply chain financing, which is the chain as a whole. Please proceed to the next page. Thirdly, the next page, please. Thirdly, we want to promote closer ties with other global financial centers. London, obviously, is the financial center that I focus in this regard. I think we can learn a lot from London's long experience of being a truly global financial center. The most recent example is that the City of London has yet again demonstrated its resiliency against the corona disruption, in that the market liquidity in bond and equity markets remained unaffected, or turnover even increased, despite under full lockdown. This is amazing. In the meantime, I understand there is an ongoing talk between LSE and JPX Group to seek effective collaboration between the two stock exchanges. The process hopefully will be accelerated on top of the FTA negotiations about to start between the two governments. Next page, please. Another possibility is a linkage of payment and settlement systems run by the central banks. The BOJ boasts of its fail-safe BOJ net, which settles yen payments and JGB contracts. As suggested by the chart, by linking the BOJ net with the system operated by an overseas central bank, Japanese financial institutions will be able to raise foreign currency against JGB collateral on a risk-free delivery versus payment basis. Finally, on the next page, I would like to remind you of Japan's attractiveness as a living kind of environment. So there are a number of good pictures. As you see, Japan has natural beauty with 4 distinctive seasons, each colored in its own way. It offers you a rich culture and gastronomic experiences. Talking about gastronomy, for your information, Michelin awards stars to more than 200 restaurants in Tokyo, which is unparalleled by any major city in the world, including Paris. Japan's train systems, including Shinkansen and commuter trains, operate with utmost precision. They seem to be so obsessed with the notion of precision that if a train arrives at its destination 3 minutes late, the conductor would apologize for the delay. Tokyo, I think, is also known to have a very low crime rate, making it the safest city in the world. It is probably the only major city in the world where you can take a nap on an underground train, or even if you drop your wallet, you will most likely be returned to you. Although I don't recommend you to try to find out if it's true. To sum up, the FinCity Tokyo initiative is not designed for the benefit of Tokyo alone. We intend to contribute to solving the multiple challenges Japan faces, such as the aging society and the need to raise productivity. Naturally, this cannot be achieved overnight. I very much look forward to working with other financial centers to meet the challenges by upgrading Tokyo's role as a global financial center. I thank you very much for your attention.
Well, thank you very much, Mr. Koso. And I'd like to hand over to Michael Mainelli for some thoughts about Tokyo from an outsider's point of view. Over to you, Michael.
Well, Hiroshi, thank you very much for an excellent contribution there. And I would just like to make a few remarks. One, I do recall, in fact, losing a wallet in Geneva once, and I got the wallet back, but not the cash. Anyway, so no, it's great to hear. And I'm very soft on Tokyo, not least as my son and grandson are in Yokohama, sorry. So fascinating. I was also very pleased you raised the historical perspective. I think that's something that a lot of our younger viewers won't really appreciate, is that there was a time, in fact, when I began studying financial centers in the 1980s, when it was widely known that Tokyo would be the third financial center in the world. And then, of course, the crises in the early 90s led to that falling off. But the long-term trend has been extraordinarily clear, as this chart here shows. The purple line there is Tokyo. And when we began this index back in 2005, you can see it was just slightly below trend, but it's been rising quite strongly. And as you pointed out in the last edition, has risen third. There's clearly a lot of increasing volatility in this index, and that existed largely before coronavirus, principally due to trade issues and currency issues, which you mentioned. But it does mean that Tokyo has certainly got a clear place in the top 5 for some time to come, and might well stabilize in position number 3, or perhaps even position number 2. We will see. Next slide, Mike. So I think one of the things that's particularly good about Tokyo is connectivity, and oddly, that connectivity over long periods of time. So deep, extraordinarily deep connections actually with the United States, extremely good links with China despite the tensions. But Japan was in China early, certainly compared with most other countries, or possibly alongside Germany. Excellent connections to Europe. So these are all quite good, and Southeast Asia has always been a reasonably good spot, although some weaknesses in areas like Vietnam. On the other hand, areas that could be expanded and are almost noticeably missing are Africa and South America, and to a lesser degree, perhaps Canada. So there are things to do here, and of course, this focus on actually having a fintech city is, I think, going to help a lot of that, getting that communication out there in what is a rapidly changing world. Third slide, please, Mike. Probably the biggest point for me is Tokyo is replete with strengths. There's no point you can list these all day. It's an extremely wonderful location, and as Hiroshi pointed out, actually a very warm and cultural location. But historically, openness has been a bit of a problem. But I say that's historically. Japan seems to be moving on a trajectory towards more openness. Had the Olympics been held this year, that would have been, I think, an enormous boost to attitudes towards Japan. The number of foreign workers has increased markedly. English literacy is extremely good. So things have been improving noticeably in terms of opening, and that is crucial, I think, for any financial center, is the ability to get people in and out quickly, so that they can conduct deals, so they can feel that they've got access to their money, their cash, their advisors, and their systems. So when we move to looking at Tokyo in the future, this is where I completely agree with Hiroshi. If there's one thing to pick on, and there isn't because there are many other areas, it's certainly asset management. The scale of the savings issues and all that are important. I think the second thing is the potential realignment of the global currency system and the dollar. Tokyo will feature very strongly there in payments and how that entire system works itself through. And I'm not trying to foreshadow that in the sense of I know which way it's going, but it's pretty clear that there are a lot of stresses on the system, and Japan will be a major player in that without question. And so locating in Tokyo makes some sense from that perspective. And the final thing I'd just like to emphasize is that Japan has traditionally been seen from the outside in the software tech area as somewhat weak. And actually, I've always disagreed with that. In many respects, Japan has led. The difficulty has been the language barrier. And so people don't see, to some degree, some of the consumer retail applications that they might coming out of other countries. But Japan led in fifth generation computing and AI, in robotics, in a lot of related areas, particularly as we move into the Internet of Things, so materials sciences, and things like electrical devices, where Japan still remains the global leader. So all of this in the round means that Japan has a huge tech base. What it hasn't done until recently has been to connect that tech base with finance. And so this is coming at fintech, not as just putting a little bit of application software at the tail end of a mobile phone on a traditional banking application, but in a lot of innovative payment ways, social networking ways, and ways that we haven't quite yet seen in the West. I often try to remind people that when we talk about smartphones in the West, I might argue Japan was there 5 to 8 years earlier. So I think you've got a great proposition here, and we're delighted to see this. But let me get out of the way, because I can see a lot of questions on the board. Well done, Hiroshi. Thank you.
Thank you very much, Michael and Hiroshi. We have a large number of questions coming in, which is very good. And I will do my best to field those as best we can. First of all, though, we have a question I think would likely to be for Mr. Nakaso about the dependence on US dollar. And do you think that really is a continuing strength of Tokyo? You were quite clear you thought that the dollar was the continuing currency. But do you see Japan as having a real competitive advantage because of US dollar?
I don't know whether you can call it an advantage or not, but it's a simple fact. The dollar still is a key currency. And as I said, even though the US power in terms of politics or military power recede, I think there is the dollar strength would probably remain as a key currency, at least for a while, until it's going to be taken over by some other currency. I don't know which one. And as I said, Japanese banks are financial institutions that more broadly playing a larger role after the GFC, in particular, when the European banks, in particular, withdrawn from the Asia Pacific region in many parts of banking businesses. So Japanese banks became very large, as I said, cross-border lenders, not only in the area of Asia Pacific region, but also I think in the US, they are quite active providing financial services in the United States. And this is dollar-based transactions and businesses. And therefore, for those reasons, like it or not, I think the dollar remains, to the extent the dollar remains the key currency, I think there is a need, there's a role for the Japanese banks to continue to play a big role. And accordingly, Tokyo market as its financial, the home financial center.
Thank you very much. We've had a couple of questions, so picking up on your comments about other financial centers in Asia. One asking about whether Tokyo is attracting Hong Kong business, financial business, and how successful that will be. And secondly, someone asking about the extent of roles of Singapore and Tokyo are complementary or competitive. And I think for the major centers in Asia, there's a question both of attracting business, but also that balance between collaboration and competition.
Yes. Okay. I think clearly there is a role for the so-called asset managers, including emerging asset managers, to, as I said, demonstrate their skill in investing financial assets accumulated in the households for better returns. I think we need a new breed of asset managers. So I think there's a lot of business potential opportunities for the new incoming asset managers, and I hope that they will ignite, if you like, a healthy competition with the domestic asset managers, and the competitive environment in that thus would result in higher returns, from which I think the future generation of Japan would benefit from. So asset management industry is clearly one of the areas that we focus when we talk about the Tokyo's financial initiative as a financial center. Now, I think there is the relationship with Singapore is more or less complementary than potential competitors in the following sense. I think the economic structure is quite different. Singapore, of course, is a financial center. Japan, on the other hand, is a big economy with a big industry base. We have a big Mittelstand, and on top of that, there's a big major global companies. So I think this the change in the structure of the industry would make two financial centers, Singapore and Tokyo, to play a different role. And I think they will prove complementary rather than on a competitive relationship.
Thank you very much. A question following up on the whole question of the dollar and also the sleeping household assets, or the dormant assets. And the question is that we know that dormant assets have been a long-term characteristics of the Japanese financial scene. And notwithstanding the positive side of trade in the dollar, the question is it the case that actually shifting global trade relationships and reserve currency investments away from the dollar will be the key factors that determine the rise of Tokyo as a global financial center, and actually the shift of reserve currency may actually be helpful to you? Do you have any thoughts about that?
Yes, reserve currency, I think, have to satisfy a number of conditions. The very fact that it's widely used and the value is stable and so forth. So I think, as I said, the status of the dollar as a key currency will not be challenged seriously. By which I mean there will be, other hard currencies substituting regionally, for example. For example, euro, I think, is playing a larger role, but not to the extent that the role played by the dollar yet. There may be some time in the future dollar advantage will be taken over, but I think it will take time. And this is only something that will evolve over time. And of course, to what extent this emergence of a digital currency would make difference, I think, is a big question. That I am not really sure. But I think the Americans are also quite keen on developing their own version of digital currency in the future. What was the other question? Sorry.
No, it's just, do you think that the shift in reserve away from the dollar, perhaps to other currencies, will be the thing which helps drive Tokyo's improvement as a financial center?
Yes, to the extent, that the yen is probably the third liquid currency. And I think there's a growing role for the yen to play a larger role to some extent as a reserve currency. Not to the extent as to the role played by the dollar, but maybe, to a higher level of usage of the yen currency. And for that, I think what makes Tokyo makes different is that, as I mentioned briefly in my remarks, the BOJ, the central bank, has a very formidable, so to speak, fail-safe, very rigid, resilient payment settlement system, the BOJ net, which took a long time to develop. And this, I think, can be utilized by linking, as I said, with the systems operated by other central banks. That would really help not only the banks but the corporate sector as well. For example, for the corporate sector, it will be available. It will be possible for them to use to settle yen on a real-time basis if the BOJ net, the operation hours of the BOJ net overlaps with, for example, the ECB or even eventually the Fed, which will be made possible by operating the BOJ net for 24 hours. So I think this is a potential area that can be further explored. That would make the yen, the usefulness of the yen currency much more upgraded, and that would probably contribute to the international currency aspect of the yen.
Thank you very much. We've got a specific question here from Narisa, who's the CEO of KogoPay, They were launching a mobile payment system this year, and are a small startup fintech based in the UK. Nurse says they have offices already in London, Thailand, and Lithuania, and is a personal big fan of Japan. She loves to go to Japan every year, except this year, which I had to be cancelled because of COVID-19. The actual question is that if Larissa wanted to set up a fintech company in Tokyo, what incentives, if any, are available from the government or the regulators in terms of assisting new startups?
Can I take it? No.
Yes, I think Keiichi could probably follow up, but the regulatory is undergoing a very substantial change in the following sense. One particular area, I think, is the so-called Open API, which allows fintech to use the platform operated by banks, and this is already in place. And I think there will be a lot of potential business chances for the fintech companies. And for example, I think fintech companies may provide payment settlements through mobile phones in the future, like the case we have seen in the cases in Nordic countries, for example. So this is already taking place, at least in the regulatory reforms. The scene is set, so to speak, for more fintech companies to demonstrate their skills. So I think this is forthcoming, and in particular, the Corona thing is only accelerating this thing. Like, myself as a ex-central banker, thought, I should use banknotes. But even myself is getting away from banknotes because of what's happening in the Corona environment. I'm now going cashless. And I think this whole move towards, for example, cashless society will be accelerated by the Corona incident. Keiichi, maybe some additional words from you?
Yeah, so Mike, just to clarify the question. Question is about the incentive provided by the government to attract fintech players into Japanese market, right? So there are a number of support available and subsidies available for newcomers to Tokyo market. So we have one-stop support center, both provided by Tokyo Metropolitan Government and FSA, to help newcomers get registered and licensed in Japan, and legal fees are subsidized, and depending on the nature of the business, we provide the some additional subsidy for office rent, etc. And given the international unrest, I don't necessarily want to specify that it's only targeting Hong Kong or any geographic areas, but we are also trying to accommodate international financial services to provide the temporary office space as well. So we have a number of support available for anybody contemplating to open up their presence in Japan as well. So I'm happy to have further conversation with this company. Yep.
Thank you. We're running short of time. I've got one more question to put in, and there's some questions will be left unanswered. But if I may, Keiichi, I will send those to you after the webinar, so you have the opportunity to go back to individuals who've asked questions, but we haven't managed to get to them. But the question that there's 2 or 3 people have been asking about the whole question of how open Japan is to foreigners, and particularly how far is the Japanese language a barrier to people coming in, and is this maybe one of the reasons that Japan doesn't have as much maybe foreign direct investment as it might have, that actually the culture isn't quite as open as it might be to people coming from overseas?
Okay, I was just this afternoon, I was looking at various numbers without knowing your question. But the truth is quite different from the general image that that you have about Japan. We are have a population, a declining population, particularly when it comes to production age population. It's declining faster than the entire population, which we call the population owner society. So this is a real problem, and therefore we need, of course, higher productivity, but we also need higher labor participation and more workers from overseas. Now, a couple of numbers for your information. Today, our young female working mothers age, the age between 25 34, 8 out of 10 in this generation work, which is higher than the United States. In the Nordic countries, this ratio is 9 out of 10. So more women than ever are working today in Japan. But that is not enough. And that is why we have to depend more on foreign workers. And this is inevitable, I think. And I found out in 2017, in terms of inflow to foreign workers or guest workers from overseas, Japan was the fourth largest. After Poland has a different kind of backgrounds, inflow from Ukraine and other parts of former Russia, former Soviet. But Japan was after the United States and Australia. So fourth largest importer of net inflow of workers from overseas. And already the total non-Japanese workers outstanding in Japan as of 2019 is 1.6 million. So it's a large number already. And this is bound to expand because we have to rely on foreign workers. This is unstoppable, I think. And it's very different these days that, our kids are much more used to cohabitation with the non-Japanese speakers. They are living with people up from outside Japan, and the convenience stores are kept by non-Japanese speakers. But our young generations are much more used to living with people that have not origin in Japan. So this is a rapidly changing society, and I think this is bound to accelerate rather than decelerate because of the population demographic problem that we face.
So, I just want to add a few words to Mr. Nakaso's comments. So, in Tokyo, you can operate without speaking Japanese because of the because that quite a few service providers, people who are working at supermarket, convenience store, and restaurants, they are non-Japanese, largely because of the labor shortage in Japan, right? So Japan is one of very few jurisdictions where we are welcoming foreign laborers, while many other jurisdictions are, debating whether or not to accommodate more immigrants or not. So challenge has been more about the legal system and regulations. So we conducted a survey with international financial services institutions as to whether they have inconvenience conducting business in Japan. There are a few areas. Medical services is one area because the communicating with doctors in Japanese or English or nurses in English is very challenging. But actually, Japanese doctors speak English. They just don't feel comfortable communicating in English. But they are, well educated. They understand, English completely. And Governor Koike is promoting to more international medical services and try to expand the availability of international medical services in Tokyo. That's number one. And second is regulations. Communication with regulators has been quite challenging because we use very specific language on financial terms and legal terms, etc. So most of people say they have very limited issues in conducting day-to-day, operations, in Japan. But when it comes to regulations, it has been quite challenging. So, financial services agency in Japan has put together a guidebook for asset managers or whoever are contemplating to, opening asset management business. And this guidebook is completely written in English, in a plain English. Historically, Japanese tend to transliterate Japanese into English, so native English speakers cannot understand. They understand every single word and grammatically correct, but it doesn't make sense, right? But they are quickly addressing those issues and making much more understandable documentation for international players as well. So we are making improvement. And situation is probably much easier. Probably, Michael, visiting Tokyo or Japan from time to time, but we are much more internationally accommodating nowadays and trying to improve the situation as well.
I would underscore that, Keiichi, and I think one of the great things is that it's difficult perhaps for the audience to realize, but FinCity Tokyo is 1 year old, and that's an enormous sign, though, that you're actually, for the first time as a major center, not saying, well, we're just here, actually reaching out and trying to bring people in. There are a lot of very good signs here. Thank you.
Well, thank you very much to our panel this morning and afternoon. As I say, we had a number of questions we didn't manage to get to, and I will pass those on to Keiichi so that you can engage with people offline and keep a conversation going as needed. I'm afraid we have run out of time. I would have loved to have got through more of the questions. So it just remains me to thank our panelists, to offer you the thanks of the audience, even though you cannot hear them. They are all clapping very loudly. And to thank you for your commentary and for your engagement this morning. So it just remains for me to say, please do get involved with the work we do on looking at financial centers, whether it's the Global Financial Centers Index, the Global Green Finance Index, or the Spout Centers Index. And the next edition of the GFCI will be published in September of 2020. I'm sure that Tokyo, along with other cities, will be waiting to see whether their position and ranking remains the same as it was in GFCI 27. So thank you all for attending. Thank you to our panelists, and have a very good day or evening, depending on the part of the world in which you are. Thank you. Bye-bye.
Thank you very much.
Thank you for having us. Thank you. Nice day.
Bye-bye.